Morning to you, Cheryl, as well. And markets seem to be, picking up that good morning sign as well. Almost in the day's highest point as of now.
Absolutely. If you look at the way how the markets are powering ahead, no doubt we saw the initial dip after the open. From there on, we've actually built on to the gains. And the star performer in today's trading session, one of them would have to be Ambuja Cements. What an uptick coming in on that particular counter. Remember that they announced the fundraising plan, the management change with Adani coming on board as well. So you have Ambuja Cements that is trading higher in trade today, 7% uptick coming in for Ambuja Cements. But let's take a look at the overall market and how the market texture is looking like this morning. If you look at the advance and decline ratio, that is in favor of the advances. You have Nifty Bank that's outperforming the benchmark indices currently. It's trading higher by about 0.9%. On the gaining front, you have Adani Ports, Mahindra & Mahindra, IndusInd Bank as well as SBI Life that are top gainers on the Nifty, while on the losing front you have Cipla, Tata Motors as well as Maruti Suzuki. So it is the auto pack that is under pressure right now. That is your Tata Motors and Mahindra and Maruti Suzuki, that is. But talking about sectoral indices per se, PSU Bank Index once again powering ahead. Top sectoral gainers with gains of about 2.7%. You also have IT Index that is seeing some sort of an uptick today, 1% uptick coming in for the IT Index as well. But on the flip side is the Metal Index that is tad under pressure along with the Pharma Index. But talking about the auto sector, right now is doing absolutely nothing. Vinny, it is trading flat with a positive bias. And last week, we saw a massive run come in the tire companies, isn't it?
Absolutely. What a move that we have seen coming in. And obviously, we did mention about tire on fire. Kunal has mentioned that saying coming in as well. But, why are they buzzing? What's the factors coming into play? They've witnessed a hyperinflation coming in their key input costs as well. Whether you look at rubber, crude, and they do turn out to be a beneficiary now because we're seeing a fall coming in over there. Let's go across to Ashesha, who's standing by to give us, why the buzz, what's happening actually with these tire companies. Ashesha?
Yeah, so tire stocks have been buzzing over the last many trading sessions, and the primary reason is the fall in raw material prices that we saw in the recent months. In fact, tire industry witnessed hyperinflation as far as input costs are concerned over the last 15 to 18 months, and now finally input costs, the likes of crude and rubber prices have started to decline. Also let's also understand how raw material pricing trends have been over the recent past. In fact, spot prices for natural rubber have fallen by almost 34% in the first quarter of FY23. Crude oil prices have also corrected 22% in Q1 FY23. However, synthetic rubber and carbon black prices are 6 to 7% higher as compared to Q1 FY23 prices. Raw material price sensitivity is also very important. Let's understand how much of an impact does change in prices of raw material have an impact on the bottom line of the company. In fact, Motilal Oswal has come out with a note which suggests that every 10% change in natural rubber prices causes EBITDA margins of tire companies to change by about 160 basis points, and for every 10% change in synthetic rubber prices, EBITDA margins of tire companies changes by about 80 basis points. But also important to understand what are the prospects for tire companies going forward. Margin recovery is expected to flow in from second half of FY23. Demand environment continues to remain steady. Demand from OEM also continues to improve going forward. Replacement demand, however, continues to be a mixed bag. In fact, analysts are also suggesting that OEM segment remains buoyant, led by improving chip supplies. So for now, decline in raw material prices, improvement or potential improvement in margins going forward, and steady demand is the reason that tire stocks have been buzzing over the last many trading sessions.
Right. Thank you so much for that, Ashesha, for putting into context what exactly is working for the tire companies and also what are the other brokerages have to say on this particular front. But let's bring on board our guests for today. We have Kunal Bothra as well as Sharmila Joshi joining us on the show. A very good morning to you, Sharmila, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And coming first to you, Sharmila, tire stocks have been on fire, though I have told this to Kunal last time also, tire being on fire is actually not good when it comes to your health. But for the sector, for auto anchs in particular, it bodes well, right? Looks like the tide is turning in their favor.
Absolutely, and I think that all the factors discussed, of course, I think rubber correcting would be like the biggest positive because we've had a sort of a scenario playing out where the demand has been fairly strong. In fact, if you look at the kind of delivery schedules most of these passenger vehicle cars makers have, then they are sort of running behind only because of the chip shortage. But otherwise, demand has been fairly strong. So I mean, the point I'm trying to make is that if you are now entering into a scenario which is a win-win for tire, because you have raw materials which are correcting, you have demand picture looks very strong, and the one factor that was sort of acting as a deterrent to demand, the demand picture not really getting translated into better earnings for both car companies. I mean, especially for the ancillaries like tires, etc., is because of the semiconductor shortage. So you are not able to deliver cars. So then your sort of your channel of payment sort of gets held up, because though the car is ready and it's been bought, if you don't have a semiconductor, you're not really in a position to roll it out and deliver it to the client. So hopefully once that flow goes back to normal, you would see an improvement in tire companies, especially if rubber prices stay where they are. So having said that, I think a lot of the positive sentiment has been captured in the prices today. I think it will sound really historical if we talk of valuations and then you have an environment where earnings are significantly improving, etc. But I think you need to give it another quarter. So I like the stocks, but I wouldn't be in a hurry to buy them.
Okay. Kunal, coming to you, obviously, in terms of charts, how are these ones looking? Because when you look at it, the last 1 month surely has seen a very good up move coming in, whether you see JK Tyre, Apollo Tyre, MRF, and JK Tyre surely has been an outperformer coming in, 33% uptick only in the last 1 month. How are you seeing, what are you reading in terms of charts for these tyre companies?
Good morning, very good morning, Cheryl and everyone. So I'll change the stance from being tire on fire. I'll say tire is on roll. So I think that should probably bring smiles. What's actually happened is that many of these tire stocks have come back to their major breakout points. So I think last week we were discussing Apollo Tyres. So I would probably want to highlight another stock in that same limelight. It's a chart of JK Tyres, and as you can see that the stock has given a big breakout, something which had happened for JK Tyres almost many years back, 5-6 years back, when the stock had broken out of a 2-digit breakout for itself. That resulted into a multi-year uptrend for JK Tyre. We are seeing a similar kind of a potential pattern for JK Tyres on the short to medium term charts at current levels, and the stock is on the verge of a big breakout, yet again of a multi-year resistance for itself. So if we go by the history and the rhythmic pattern for JK Tyres, this could be an indication that the strong trends could be ensuing for many of these tyre names, and this may not just be a short-lived trend, but this could probably be a bigger trend which could last for many years to come by. So would be bullish on the tyre space overall, and would take opportunities of a 10% drop from the previous highs as a good stance to try and chip into these names.
Okay, that's the view coming in from Kunal, and keeping an eye out on JK Tyres as well. But with that, let's just slip into a very short break, viewers, but don't go anywhere, because we will be taking your stock related queries after this break. Stay tuned in.
Co-powered by OLX Autos. Only OLX.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's keep it going then before we get to your queries. Kunal, Sensex, how is that looking like today? Surely seems to be above the 59,200 levels. Where do you see it moving from here on now?
Well, yes, you know, 59,200 has been the benchmark support for us, and I think I've been indicating this time and again that till the time the Sensex is above this level, we can probably expect the markets to get into a gradual, swifter uptrend for itself. But if the 59,200 mark is not held on, if we manage to see a 2-day or a 3-day consecutive close below this level, that could probably spoil the mood of the market, at least over the very near term. I'm not expecting any major correction on the indices, but I believe broadly the range is shifting lower for the Sensex. So what was earlier just a 60,000 pivot is now probably a 59,200 pivot for the Sensex. So that would remain the short-term view on the indices, specifically on Sensex.
All right, and that is the levels to watch out for Sensex. But Sharmila, given the volatility that we are seeing actually in the markets, what would you suggest the retail investors? How can they actually protect themselves from the sharp gyrating moves that we are seeing in the markets?
Yes, interesting question. Because clearly a couple of times we've gone close to the 18,000 level and we've corrected from there. Which simply means that this is, the kind of level where you're not really sure whether, which kind of move we are going to see the market making. So I think the sensible thing to do at this point in time is to do an SIP on the stocks that you want to buy and try and identify stocks and stories which you think will play out well over the next couple of years, where earnings are also reasonably good. So I think the 2-3 boxes that you need to take is one, that the valuation should not be too high. Number two, it should be a sector which you like, and thirdly, the stock should be one which has very decent results, or it has to have something going for it. Either the financials are improving, or there is some some sort of story playing out, and you can look forward to better things in the coming years. And then again, I think don't buy everything immediately, but the strategy has been to buy increment.
Right, so that's the view coming in from Sharmila as well. But let's kickstart with our queries then. And for all the viewers who've just tuned in or tuned in for the first time, this is a show where we answer all of your stock-related queries. So you can write into us on the WhatsApp number that is flashing on the top of your screen, or you can actually log into YouTube, Twitter, Facebook. We are live on all of those streaming platforms. So do mention your name, the stock that you have a query on, whether you've bought the stock, you're intending to buy the stock, or if you already purchased it, then do mention the quantity of the counters that you're holding, as well as at what price did you buy it. So let me kickstart with the query segment, and the first one that's from Nino, and Nino is wishing us all of us a very good morning and have a great week, he's saying. Also, he's wants a medium to long-term view on Ganesh Ecosphere. Do you track this one by any chance, Sharmila, Ganesh Ecosphere? All right, Kunal, by any chance you have a view on this one?
No, not really. Don't track it.
All right, then Vinny, you can take it away.
Okay, then Sharmila, very good morning. And I have the first query which is coming in on obviously the most talked about stock for a while, that is ACC and Ambuja. Anup from Goa wants to know whether it's a good time to enter this one at the current market price for a long term.
So, just a little while earlier, I was saying that you need to have a stock which you are comfortable with, over the next couple of years. And I think cement would be a sector, and within that space, ACC and Ambuja would be good stocks to be looking at. And I think there are a couple of reasons for that. Apart from the fact that I'm positive on the sector, I mean, there are various reasons for that. I think that we've already got some indication that government spending is going to increase on infra projects. And that always augurs well for cement as a sector. So that's which is why I'm positive on the sector. And then we have a changing story in ACC Ambuja, because you have Adani Group taking over. And I think for the longest time, though ACC and Ambuja were considered good stocks, they were sort of in a limbo because you didn't know how this thing was going to go ahead, post wholesale exit, etc. So now you have a sort of a clarity, and now you're hearing from the management, and the management style is aggressive, and they are talking of making further investments in Ambuja Cements and expanding capacity, etc. So I think even from the next couple, which is why I think you're seeing the run up in the stock today. So allow that to cool off a little. So again, as I was saying earlier, the strategy should be to try and buy it incrementally. But yes, at this point in time, this looks like a good stock to me. And as a disclosure, I do own it.
Gopalan is actually intending to buy HIL Limited for the long term, that's for 2 to 3 years. He wants to know how does this counter look like. Do you track this one by any chance, Sharmila, HIL Limited?
No, I'm afraid.
Okay.
So it does seem a cement phase, so maybe the same logic applies. But this is not a stock I track.
Okay, then let me take a next one then. This one is coming for you, Kunal, and this one is from Akash Mathur. And he's asking, is Mass Financial a good buy at current market price for the medium term? He's saying he's already owning ICICI Bank, IDFC First, as well as IDFC.
I think it could be a good addition to your portfolio, because I'm assuming and I'm sensing that you have a good mix of large caps and mid caps, etc., from the banking as well as financial space. Mass Financial, the reason for I believe that the stock should be a part of a portfolio is because of the very recent run-up the stock has shown. Just around that 500 mark is where the stock had established a good bottom for itself, and over the last 4-5 months, in fact start of 2022, the stock had tried to had gone through multiple tests of this 500 mark, it was trading below the 500 levels for a brief period, but then the way the stock has bounced back time and again from those levels indicates that it's finding a good demand zone or a support zone at that point. So keeping that as a positional kind of a support level, I believe Mass Financials could be something which you can definitely look to eye upon.
Sharmila, this next query is on one of the recently listed companies, that's Paradeep Phosphates. We have the viewer who's bought 1,000 shares at the IPO price of rupees 42, and it has been doing well, you know, almost at rupees 70. Could you please advise whether they should continue to hold this one or book profits?
Yes, I think you can continue to hold it. The numbers seem fairly decent. So I think that this is a stock that you can continue to hold at this time.
One is from Dasaradi, and he's holding, he's asking whether he can continue to hold Chambal Fertilizer. He already has 100 shares, which he's purchased at 341 rupees per share, Kunal. He wants to know whether he should hold on to it. And yes, then what sort of a target should he aim for this particular counter for the next 3 months?
See, I'm assuming in that you've bought it very, very recently, and it's not that you're holding it from a long period of time. But I believe that closer to 350, 355 mark is where the stock seems to be finding some good resistance for itself. And since it's a very short-term kind of a query, I would probably believe that it makes a lot of sense to book out profits in this range of 350, 355, and then look to buy back again the stock lower. So, the last 4 or 5 days of candlestick pattern have shown that possibly this zone of resistance could be a major zone of resistance, and that is acting as a a zone of supply for Chambal Fertilizers. And if this correction is something to go by, then the stock may correct back towards the 320 level. So it makes a lot of sense to book out profits in this zone of 350, 355 and look to buy back again once the stock reaches the levels of 320.
Sharmila, this next query we have is on Shobha, and Shankar from Tamil Nadu has bought Shobha at 705 rupees, holding 145 shares currently. Please give your advice on this. Should they continue to hold this one for a long term?
This is Shobha Developers, right?
Yes, Sharmila, it's Shobha Developers.
Yes. Yes, within the real estate space, this is a stock, and the area that they operate in are both something that I like. So yes, I think we can continue to hold on to Shobha Limited. I think in terms of earnings, they are not earnings and valuation seem a little high. So maybe the stock could correct a little bit from here. But if you're there in it for the long term, I think you can continue to hold.
One is from Anup Gowda, Tata Motors. He already has about 1,000 shares purchased at 480 rupees per share, Kunal. He wants to know whether he should average at current market price or should he continue to hold or exit.
See, I would suggest to continue to hold on. This is a brief period of underperformance for Tata Motors as compared to rest of the other auto pack and most of the other major stocks, whether it's the four-wheeler names like M&M, Maruti, etc., or whether it's compared to the two-wheeler stocks, the likes of Eicher Motors, etc. So I'm sensing that it's a brief period of correction the stock is going through. Once that gets once that evens out, is where you can expect the stock to get back into the line of outperformance and getting into a strong uptrend for itself, which should be pretty soon for a stock like Tata Motors. I would suggest an averaging out. If the stock corrects towards 420 mark, so it's at 430 approximately, so maybe another 2%, 3% correction from current levels should be a good point where you can to average.
All right, so that's the view coming in on Tata Motors. But hang in there, viewers. We will be slipping into a break on this edition of Buy Now, Sell Now. But when we come back, we will continue the journey of taking all your stock queries with our experts. So don't go anywhere.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that.
Welcome back. You're watching Buy Now Sell Now on ET Now, and we will continue with the queries then. And let me get on board this query coming in from KR Balan. He's saying that he has 1,000 shares of HDFC Insurance, and he's making a 15% loss on this one, and 100 shares of Godrej Properties where he's making a 10% loss, Kunal. So now he wants to know whether he should continue to stay put with HDFC Life and with Godrej Properties, or should he look to shift to something like a Nuvoco Vista, United Spirits, or anything else, or Jayakov for the matter of fact.
See, I think this is what typically happens with many investors as well as traders who tend to buy quality stocks, and at phases or at some point of time, these stocks, they tend to underperform rest of the other markets. So there's always this tendency to shift towards performing stocks. But then with quality stocks like HDFC Life or whether it's Godrej Properties, such the names, you have to spend a lot of time, because these stocks, they would make a dramatic comeback for themselves whenever the sector goes into a very strong revival phase. So you have to be patient enough. I think both these stocks are good enough. They are absolutely strong quality for their respective sectors. And I think if your time horizon is not restricted towards immediate short term, I think you should not shift towards other names. You should try and hold these stocks particularly.
Okay. Sharmila, the next query we have coming in is from Leon. They want a long-term view coming in on Canara Bank. They hold 1,000 shares at 247. What should they be doing?
So we have seen a revival in banking as a sector and PSU banks specifically. So from that perspective, I think it makes great sense to continue holding Canara Bank. But I think do keep an eye on this trend that we've seen in the banking space, where we've seen an improvement in earnings and the NPA levels getting controlled and falling further. Because I think that would be a key metric as far as a lot of the PSU banks are concerned, because the credit growth does seem to be there. They're simply bogged down by their legacy sort of NPA issues. But now that picture seems to be improving for the bank. So yes, I think keep your horizon long term and continue to hold.
This next query that I have is coming in from Harish, and Harish is writing to us from Bangalore. He's holding TTK Prestige at around 1,100 rupees per share. He has about 100 shares, Kunal. He wants to know he wants a technical view on TTK Prestige, and also if it makes sense to average at this level.
Well, I would suggest to just hold on to the existing quantity, not to average TTK Prestige at current levels, because the stock seems to have run up exceedingly high. I think the last 4 months from I think June or July lows, the stock was at 740 levels, and now it's almost 1,000 plus. So it's a steep rally of more than 250 plus points for TTK Prestige. That may make the risk reward not lucrative enough. And given the circumstance and the scenario of the markets, where the index is also taking a bit of a backseat, it always makes a lot of sense to try and have a strategy where you can look to buy these stocks at a point of decent retracement. So for TTK Prestige, assuming if the stock corrects and comes back towards 950 mark, that could be a point where you can look to start buying the stock, not at current levels.
Okay, Kunal, I'm going to come back to you. We have this query coming in from Manikandan from Malappuram, and this one is on Bank Nifty. They've bought Bank Nifty 42,000 call option for a 22nd September expiry at 95.4, I believe, or 954. They've not. So at 95 for lot size. Please suggest what should they be doing with this one.
See, I think it's a bit of I would say a steep ask for the Bank Nifty, because right now we are going to a point where the banking index is getting into a turnaround mode. It's showing a lot of strength. I think if I'm not wrong, the call option which you're mentioning is almost at 105, 110 levels. So your loss seems to be limited. The positioning which you have done, or the timing, is also more or less near to the bottom for this particular option. But the only catch is with respect to the 22nd expiry, because assuming if the Bank Nifty doesn't move up higher in the next 1 or 2 days, then there could be a strong probability that this call option would start eroding a lot of value for itself. So it's a bit of a tricky call on the banking index. If possible, you can roll it over to the next week expiry, which could also coincide with the monthly expiry. I think then the stance could be a lot more comfortable for the banking index to try and cross about that 42k mark.
Okay, this one is from Central, and I'm coming to you, Sharmila, on this one. He has both Manappuram Finance as well as Muthoot Finance. So Manappuram Finance, he has I think he has about 117 shares, which he's purchased at 161, and the stock is down about 38% from the buy price. And Muthoot Finance, 20 shares, purchased at 1,234 rupees, which is down approximately 16% from the buy price. Now he wants to know whether he should continue to hold these counters, or look to exit, or switch, or look to average. He's a long-term investor, but he's looking for your advice on this one.
And I think he's on both stocks, is that right?
Yes, on both. Muthoot Finance as well as Manappuram Finance, holding both, incurring losses on both.
What has happened is that the business environment for these sort of gold loan companies has changed slightly, because banks have become more active in this space, and they do have a better reach to clients, etc. What was working for Manappuram and Muthoot and the like is that they were able to reach where the banking sector was not able to reach. But this is something that in the last year and a half has sort of dropped off. So I think if you have a reasonably longish sort of horizon in mind, where you're looking to stay invested in these companies for a couple of years, then I think you can continue to hold, because they are sort of going through a transition period, until they find their sort of feet and in this new change environment and are able to better reach out to clients, etc., it's going to take a while to really even reflect in the numbers. So I think keep the patience and stay invested.
Okay. Kunal, this next query we have is coming in from Dev from Chennai, and it's on Tanla platforms. They're holding Tanla platforms at an average price of 1,790 rupees per share. Should they hold or take the buyback when it's offered? Also, is it the right time, or should they be looking to shift to something like an ONGC?
See, frankly, I'm not aware of the buyback and the price for that as well for Tanla. But then purely on the charts and looking at it from a short to medium term play, the stock seems to be have formed a good base at that 600 mark. There could be now a possibility where, at least over the near term, the stock may probably try and drift lower to that 600 mark back again, try and double test or retest the previous major support, and then depending on how strong the bounce is from that second retest of the 600 mark is where we can categorize that whether the stock has formed just a short-term bottom or whether this is a big bottom in place for Tanla platform. So there are a lot of imponderables for the stock price over the near to medium term. I would suggest to wait out for some more time on the stock price, not to average at current levels, but assuming if the 600 mark holds on for the next 1 month, then there is a possibility that the stock may form a formidable bottom, and the path on the upside could then be a bit more clear for a stock like Tanla platforms.
Okay, this one is for you, Kunal, once again, and this one is coming from Vaibhav, and he wants to know that will Ambuja Cement be a value buy at current price for a period of about 6 months?
Well, it's already, I think, run up exceedingly high. Now, it's very difficult to categorize that whether these rally is here to sustain or not. The best way to try and trade these stocks is either if you're looking to buy the stock, have a strategy where you have a 3-day trailing stop loss, 3-day close, or a low as a trailing stop loss, and if the stock happens to break below that level, you try and exit the stock. And assuming if you're looking to buy the stock as well at current levels, you have to keep your position sizing a lot more lesser than what it would have been when the stock was at a much lower level, because the stock has run up exceedingly high. The momentum is in the favor for a stock like Ambuja Cement, and we've seen this for so many of the other Adani group of stocks as well. When they've run up exceedingly high, they've managed to protect their 3-day swing lows and then continue to ride the trend up higher. So that could be a better strategy for Ambuja Cement. You may look to buy at current levels, but then have a 3-day trailing stop loss as a low or a stop loss for a trade.
Okay. The next query you have is coming in from Sandeep. Sandeep, very good morning to you and welcome to you as well. But Sharmila, this one is for you. Sandeep is holding good shares in his portfolio, like large cap names like M&M, Asian Paints, L&T, Infosys, ITC. But they want to know, for a long-term view of 3 to 4 years, any mid-cap name, if you could give 2 stocks with good valuations? Yeah, 2 stocks. I mean, I know you will have a long list, but 2 is what they're asking for as of now.
Yeah, so that's the tough part of the question. So, just to go back to what I was saying earlier, try and go with stocks where you think the theme will look good for the next couple of years. And 2 themes that come to mind immediately. One is, of course, what has been called the China Plus One for the chemical space. And we have had stocks rally and fall and sort of now find their own space within that. So one stock that I do like within that space is Nitrite. So that could be one stock to look at. Another slightly riskier stock but with good fundamentals could be MAPMA India, because I think the possibilities that could open up for companies within this space over the next couple of years could be substantial. So these are 2 good names that you could start sort of incrementally acquiring.
Okay, Kunal, the next one is for you. This one is coming from, actually I'll take this one to Sharmila then. This one is coming from Aman Soni. He's looking for an advisor on Dr. Lal Path Labs. He's already holding at an average price of 3,080 rupees per share. Now he wants to know, Sharmila, should he stay put with Dr. Lal Path Labs or look to switch to other counters? And the one that he's mentioning is Apollo Hospitals. Do you think that it makes sense to move from diagnostic space to Apollo Hospitals?
Well, Apollo Hospitals has the presence in the diagnostic space as well, and I do like Apollo Hospitals. So yes, I think given the fact that the diagnostic space has sort of kind of run into rough weather with the competition eating up and low cost suppliers coming in and so on. So again, this is a sector that's in a sort of a transition phase, and they are trying to find their way out of it. And while Apollo Hospital does have a presence in this space, it also has a pharmacy, it also has a hospital business that's doing well and is expected to do really better as sort of medical tourism returns. And even I think like they are now seeing their business. I mean people going in for operations etc. go back to pre-pandemic levels. So I think in all from what all I am saying, I think I prefer Apollo Hospitals to Dr. Lal Bank.
Kunal, this next query we have is coming in on Union Bank. This query is from Sugumar from Chennai. They're holding 1,000 shares of Union Bank purchased at 36.10 rupees per share 3 months back. What should they be doing? Should they continue to hold or sell this one? What's the view?
See, I think the PSU banking stocks, they are going through a very big breakout for themselves. So whether it's the likes of SBI, which has already hit a lifetime high for itself just about last week or so. Bank of Baroda, Canara Bank, these stocks have done exceptionally well. So I think in that limelight, possibly Union Bank can also continue to move up higher. But then the only question is that somewhere down the line you would want to shift towards quality, even if it's from the PSU banking names. And I believe a better strategy would be right now, because I think the likes of Canara Bank, Bank of Baroda, they look very attractive to me on the charts relatively with respect to the other peers, as well as in terms of quality as well. So you've made a good profit on Union Bank from 36 levels to now 48 approximately. I think it's time to book out and then shift towards quality. Likes of Canara Bank and Bank of Baroda could be better alternatives.
All right. Let me take this query from Sagar, because Sagar has been writing to us continuously, but we've not been able to take his query because he's been writing to us a bit late. And yes, Sagar, I understand that you're logging in from Paris right now. So let me take this query then from you. He wants a view on Sapphire Foods. He's bought about 3,550 shares of Sapphire Foods at around 950 odd levels. Wants to know what's your view on this one, Sharmila, on the overall QSR space. And do you think that Sapphire Foods stands out in that particular segment?
First of all, coming to the space, I'm reasonably positive on the space, and while I think that the pandemic sort of did provide them some unique opportunities, I think even as we return to full normalcy, I don't really see them going away. And coming specifically to Sapphire Foods, I think the earnings trajectory seems to be good. So I would really continue to be positive and continue to hold what he can continue to hold what he has bought.
Okay. And let's start now with the rapid fire. Kunal, I'm going to start with you. We have the query first one coming in on Infosys. KVG Reddy is holding shares of Infosys, 100 shares at 1,800 rupees per share. 6 to 9 month view, hold or sell?
I would suggest to hold on.
Jay Krishna wants to know Fine Organics, is it a good buy at current levels for the medium term, Sharmila?
Oh yes, I think you can buy, but slightly longer.
Okay. Kunal, should the viewer, Mr. Mukherjee, shift from Glaxopharma to Infosys? Is that the right move?
Well, that could be a good move.
Okay, Shailesh is wondering why is Asian Paints going down, and he's also asking, is it time to sell Asian Paints? Do you think so, Sharmila?
Well, Asian Paints going down because competition within the has improved and new players have entered. But food is correcting, and I think that Asian Paints will continue to do well, so I think you can.
Manish from Delhi, Kunal is holding 2,000 shares of Praj Industries at 370 rupees and 2,000 shares of Tirumalai Chem at 230 rupees. Should they continue to hold this for the next 2 months?
I would suggest to book out profits on both of them.
Okay, Ashish is holding Mass Financial 100 shares at 600 rupees per share. Wants to know whether it's a good to hold on to, and also should he look to buy some more. What's your take, Sharmila?
Yes, I think he can continue to hold what he has.
Sharmila, coming back to you, we have the next query from Praveen Kumar and wants to know the prospect of Poonawalla Finance long-term view.
Oh yes, I think the long-term view stays strong, so continue to hold.
Okay, Abraham Thomas wants to know about APL Apollo Tubes short-term prospect. He has already 150 shares at 970. Kunal?
I would suggest to hold on.
Okay. L&T Finance, Sharmila is the next stock. We have Mr. Mathivanan from Chennai who is holding L&T Finance 1,700 shares at 150 rupees. What should they be doing it? Continue to hold this or sell?
Well, looking at the hold, but I don't really see it going to happen. My target will be closer to about 90.
All right, and with that, we come to the end of the Rapid Fire, the query segment. Thank you so much, Kunal, as well as Sharmila, for joining us on the show, giving your views on the tyre sector, as well as resolving viewer queries. And viewers, if we have not been able to take your query today. Please don't be disheartened. We've just started the week, so we will be back tomorrow. We will be taking your queries, so do write into us. But for now, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned. Lots more on the other side, so don't go anywhere.
If you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.